The estate tax is a tax that's levied on property. In order to inherit an estate,
not real estate.
Yeah, but wealth. Basically, in order for wealth to be passed down, the bulk of the wealth, before it gets split up amongst its inheritors, the number of people who get it, wealth is taxed. As long as it's big enough and it meets, certain kind of cutoffs in value, then a tax is levied on it. That is the estate tax. We have had it since 1916 in the United States. It came right after we passed the 16th Amendment and passed the graduated income tax. A few years later, we've had the estate tax. So it has been part of our tax code for 109 years. And over the past 25, these big pieces of tax legislation have messed with it.
Yeah.
And they've increased the size of the estate.
That is exempt.
That is exempt. So you only pay this tax if it's a lot of money. You have to have a lot of wealth in order to pay the estate tax. That's always been true, but it has been raised to such an incredible degree that very few estates pay it. In 2001, before we entered our tax cut era, when the estate tax cutoff was about $1 million. So you had to die with $1 million in assets in order to pay the estate tax. If 10,000 people died in 2001, just over 200 of them would pay this tax. So it fell on around 2% of people. You could not overstate how few people paid this tax. But instead of kind of relying on that as a source of income and revenue, we have drastically cut the estate tax, tinkered with it incredibly, and now 0.07% of estates pay the estate tax. So if 10,000 people die in 2025, 7 of them will pay this tax. Virtually no one pays it right now.